Okay, so today we are going to be doing the Sunday Traders Talk for week 2, the 12th of the 5th. So it's going to be the 12th of May. Now, for this talk, we're going to have it be pre-recorded, mainly because today is Mother's Day. So happy Mother's Day to everyone out there, and to everyone else, I hope you're going to have a good day with family and loved ones. But I didn't want to host this live because not only for myself, I have, personal things that I have to go sort out today with family. I'm sure a lot of you as well need to do that. So based on this talk, we're going to try and keep it at 60 minutes because I know the talks keep running on to 90 minutes and those are incredibly long. If we're doing 4 talks a week, 4 talks per month, and we're doing that every single month of the year, that's a huge amount of content, even when keeping it to a 60-minute talk. So we're going to jump through this, we're going to go through the news, and then some really great trade ideas, and then we're going to talk about some aspects to do with risk. So let's jump into it. Okay, so for the 12th of May overview, so we're going to be calling this week 2. We're going to look through some news updates. So we'll go through these 3 points, some interesting things to do with trade talks, to do with inflation in the US and the Federal Reserve. And then we're also going to somewhat avoid some stuff to do with Brexit. There's a lot of stuff going on with Britain and Brexit, but as I mentioned in one of the previous talks, there's just so much volatility going on there. I just really don't want to jump into that area of the world right now. And then there's going to be 3 other talks, slightly smaller talks. Important to know, we're going to be talking a little bit about Bitcoin, ANC. So there was a massive national election in South Africa. To a lot of my students who are based in South Africa, we're going to talk about that as well. And then also Uber's IPO, which was quite an interesting IPO to watch. Then for trade updates, we're not going to be talking about any new trade ideas because we've already got 2 new ideas on the board that was posted out on Twitter during the week. So if you guys are not following us on Twitter, please make sure to. We post out all the trade ideas on Twitter. So if we don't talk about the trade ideas in the Sunday Traders Talk, it's mainly because we've already posted out that information during the week. And then also general reminder, talks are being hosted live versus uploaded and sent via email. So if we do not host the talk live, you'll be sent a link via email with the access to the talk. You'll be able to watch that talk in the comfort of your own time throughout the day. But also please make sure, it does mean you need to do it on a Sunday. You need to make sure you get to that link and get yourself sorted and prepared for the week going forward. So jumping into the news updates, we're going to have a look at some of that. So starting off with a headline, tame US inflation keeping Fed on the sidelines. So I'm quickly going to jump through the main points of it. So all you just have to do is click on this and it will pop up the link. So I've got the links up here. Some of the things I quickly wanted to have a look at, consumer prices rose moderately in April and underlying inflation maintained muted. So this is a bit of an interesting thing. Basically, consumer prices are rising consistently, not by a huge amount, but they are rising. But the thing is that underlying inflation is staying completely muted, and it's going to kind of tie into one of the other articles we're going to do, which is going to be this article from Seeking Alpha talking about dollar creating instability. It's going to really explain it in full for you. But going back to this, definitely interested that supporting the Federal Reserve's further interest rate increases this year. It doesn't really make a lot of sense to me. If inflation is not driving up, you don't really want to try and play around with interest rates. Even though consumer prices are going up, inflation is not going up. People are not buying more on credit. They're just not buying more in general. So in terms of that, the third article is really going to support my opinion. Make sure to also go down and have a look at what Trump has been talking about. Although he doesn't really have an influence on the central bank, he's really been talking about really good, very low inflation. He's kind of enjoying the fact that there's very low inflation. So, he's pushing it going into his 2020 electoral campaign. So he's going to do everything in his power to try and make sure that, this rhetoric stays throughout his campaign and doesn't really change by much. The big one is that in terms of stuff happening with Chinese goods and import-export, which is going to tie into our next article we're going to talk about, that's definitely been heavily affecting inflation and keeping inflation rather low as well. And then just making sure that you finish up the rest of it. Definitely some interesting results coming up between April and March. I was definitely interested to see that as well. So then going into the next one, basically these three articles tie into each other. In terms of the trade talks, we had quite a strong push on the markets. If I quickly throw up the US 30, the US 30 markets, you can see how consistently since we've had those trade talks, and there's been quite a lot of volatility. We've had quite a few down days. There's been a lot of volatility up and down. So as the market's been pushing lower and lower, it keeps on bouncing off the Bollinger Bands. I was able to trade one or two of these events and make quite a good amount of profit off of them. So I was quite happy that I could get in and out of some of these positions and make a good amount of money and then carry on with the rest of my day. So although this was an opportunity to make money, I'm not really shorting the market. I'm just really dip buying because of this specific talk that we're just quickly going to look at. So, having a look at this article is quite important because, the big one is that they're cautiously optimistic. So throughout the week, speculation was showing that the trade talks were actually, somewhat divulging, but that was really just the media speculating, to be honest. They sort of said here, voice measured optimism on reaching a deal, but said there were issues of principle on which China will not back down. So, the chief negotiator basically said negotiations have not broken down. Quite the opposite. I think setbacks are normal and inevitable during negotiations of both countries. Looking forward, we are still cautiously optimistic. So they're really trying to hold up the market. They're trying to hold up their currency as well as hold up what they currently have available in economic growth in China. China has not seen a very good 2018 year of growth. Most of what China's growth was built on was really, the fact that the Democratic Party, the Obama administration, labeled China as a developing country, which I found was very, very weird. They're basically the second largest economy on the planet. And then on top of that, they also were, basically handing out, hundreds of billions of dollars in business and import business to China, which I thought, was very wrong. And, that was really growing the economy. Now that Trump is clawing back that business and rather bringing it to American soil, now basically the Chinese are losing their biggest customer, which is the US. So they're being very careful now. They're being somewhat bled dry. And you can kind of see it translate into this. And once again, Trump took to Twitter, which actually did affect the performance of the market. From some of the bad tweets he sent out, pushed the market lower. Some of the good tweets pushed the market higher. But they're almost saying here to see if they could get get lucky and have a Democratic win, in which case they would continue to rip off the USA for $500 billion a year. So this is what Trump was speaking about. And China is very optimistic about wanting a Democratic president in power. So this is a very political article, but it ties back a lot into the fact that we're seeing very low inflation in the US. People are not buying as much because prices are being driven up by the trade wars in China. Going into the last one, Fed's chief concern may be the dollar creating instability. This is a pretty important article. I really enjoyed reading through this. Make sure to have a look at it as well. There was a lot of great information shared in this article whereby they were talking about the fact that if the dollar becomes too strong, it could cause problems with foreign countries holding debt in dollar, because as the interest rate will rise, their debt will be refinanced and could be unaffordable and could cause them to default on their loans. So obviously the Federal Reserve is being very careful about not basically jeopardizing emerging markets countries and other foreign countries, because they are growing below pace. They are growing slower than America. And you can sort of see, yes, it is a bubble manipulated higher by those with money chasing returns, leveraging up and taking on risk with a low interest rate environment. Have no doubt the seeds for inflation for the future have been planted everywhere. So what they're really talking about is the fact that inflation is really being planted just about all over the world, because the US is rising interest rates, but their inflation is not being affected. However, the inflation of other countries is being affected because they do need to spend money. Whereas in the US, they were basically talking about here how asset purchasing by big companies, where basically the companies are buying back their stock, they're buying as much assets as possible, they're sitting on cash paid assets, so like land that has been paid for in cash, new products, expanding into new ventures. But a lot of this is being paid for with cash because the companies are making so much revenue. So they're really trying to, in terms of avoiding tax profits, they're really trying to secure assets, and that is basically driving down inflation because nothing is really being purchased on credit. Now, although this is a very small niche of the market that is doing this, it's actually some of the biggest leading corporations in America that's doing this. And going on to the next slide. Sorry, not the next slide, the next article. Something I thought was a pretty interesting article, which someone sent me, talking about the Bitcoin price. Now, though I don't trade Bitcoin, I don't have a very good opinion of Bitcoin, but that's an unbiased opinion. At the end of the day, if Bitcoin becomes a very good asset class to trade, I'll probably start trading it. However, because of the volatility and the cost of holding Bitcoin positions on derivatives trading, I don't really trade it. It doesn't really make much sense for me. But as you can see, there's quite a nice, technical analysis article. There's quite a lot of interesting pieces here where they talk about some of the different indicators as well. And then also talking about, here RSI is currently reporting overbought conditions. So although, it's saying that we've got Bitcoin pushing to an 8-month high, we could possibly see the market pull back and come back in for another push to the higher levels. So I enjoyed reading this article. I always like to try and keep updated with all the new technology. Although I do not trade it, I cannot keep a biased opinion of anything. If something is worth making money on, it's worth making money on. But right now, for me, Bitcoin doesn't make sense. Going on to the next slide, sideline article. ANC keeps power in South Africa, but scandals cost it votes. So to everyone in South Africa, obviously this article is going to be very relevant to you and probably not be a very nice article to read to some people, but to the international community, South Africa is somewhat the leader of the African economy, and people look to us as a benchmark for what's happening in Africa. And right now, it's a little bit sad. So the ANC came into power in 1994. I'm not going to give you much of a background, but basically became the party of democracy and of freedom, and began driving, the country to a better state out of what the National Party did with apartheid, which was very, very bad. However, over the 25 plus years in power, they've basically driven the economy into the ground. Interest rates are in pieces, inflation is in pieces. In terms of unemployment, it's all-time highs. In certain cases, based on, back in the 1980s, the 1970s, and poverty rates are also incredibly high. However, they still controlled power, but there is a pretty important thing here. In terms of, you have a look at this specific paragraph, which really, encapsulates the article. So the ANC's 400-member parliament fell to 230 from 249, so they have lost ground. The Democratic Alliance, which is seen as, some speculators almost call it the white party, which doesn't really make sense, but the DA has also lost ground on their seats. However, the Economic Freedom Fighters, which is seen for making some very polarizing and scary statements in the public media about, driving white people out of South Africa, and, making some very, very racist comments, has now gained over double their control. So this is quite a scary thing to see, that quite an unstable and volatile party that has shown sheer racism towards basically white people and people who don't originate from Africa. They basically are gaining power in the government. So it's a bit of a worrying article, and this is really going to make Moody's and the S&P really have a look at South Africa and decide on the future. Investing in Africa and South Africa, really one of their leading metrics when they have a look at the health of a country is really its politics. Whereas in other countries, they don't really worry about it because politics in other countries is much more secure. So it's an important article to look at. This is really going to dictate the future of our economy and the future of what the S&P and Moody's would like to, grade us in the future for investment grade. Then going into the last article, Uber market debuts Uber market debuts Sauer's most anticipated IPO since Facebook. Pretty interesting IPO. However, another sort of leading aspect of this is you can see Uber's shares ended day down 7.6% for $41.57. Although the S&P reversed its losses at the end to end in positive territory. So that's really, if you have a look at here, the last sort of day and a bit, we had a bounce off the low of the Dow Jones market and then a big push to the upside. This is basically, the market really showing optimism in the trade talks with China. And this really caused a momentum push on the IPO stock. So it's difficult to say whether this is really the true end price for the IPO. Possibly the IPO price would have been slightly lower. But the Uber IPO was really, they missed the mark. They IPO'd after Lyft did. They had huge delays in the IPO, and then on top of it, the IPO wasn't at the value they thought it would be at. So, it's been marred by a few problems here and there. So going on to the next one, we're not going to be talking too much about strategies now because the strategy we're going to talk about is later on, but we're going to give you a trade update and the weekly progress. So this is going to be something new. I'm going to show you the closed orders, the open orders, and then just give you a few paragraphs showing, my opinion of both aspects. So in terms of the closed buy orders, we closed a position out on the euro pound. So let me quickly open the my portfolio, so you can have a look at that as well. So in terms of the progress, as most of you know, this is the fact sheet that we have that basically shows you all of our returns. So all of the trades that we've taken, you'd be able to go and filter down here and have a look, so you can see the trades we had on the US 30, the euro pound, the USD CHF currently open, the Aussie dollar Japanese yen currently open. So you can go have a look at the trades we've taken. You can see it's been quite an active week. We've had quite a few positions open, and then you can also have a look at some of the trades we've taken right now. These current trades open are really just open exposure. These are not losses we have right now. So right now, so far so good. We've had quite an active week of trading, quite a profitable week of trading compared to this gap we had previously and the gap prior. We also had, there was low volatility in the market. We are struggling to find ideas. So we just kind of stayed away and focused on, finding the right ideas. So you can see our balance drawdown is sort of also going well, but because we're holding some of these positions for quite a long time, our transaction cost is rising considerably. So we also have to be very careful about holding these transactions for a bit too long. However, at the end of the day, we're happy with our portfolio's performance, and, our other portfolios are well, growing very well. We had about another £100,000 allocation to our copy trading portfolio on Variance. So our fund is growing consistently, and we continue to add new copy trading clients on board. However, you can make use of that to just, verify these results. But at the end of the day, we closed out on 3 buy orders, 1 sell order. The buy order, the euro pound, we opened out on Friday, 2 weeks ago, I think it was, or last week. We posted that out on Twitter. We got out of that position, very easy, very straightforward trade. If I quickly pull up that, because we're not going to give that as a trade update, let me quickly have a look at where euro pound is. There we go. So what you'll see here is, I'm quickly going to throw up a template. Okay, so basically what we had here is the market had a really nice push down to the downside. We basically got out a little bit too early. I can definitely admit that. I am known for getting out my positions a bit earlier than normal, but at the end of the day, the only trade you lose money on is the one that you have open. So, I got out of the position. Some of my students held it all the way to the upside. One of my students made quite a great amount of profit off this trade, so I was very happy to see that. And then, we've had that strong push to the upside. So yes, I did get out early. However, there was great progress to the trade. There was a major push to the downside, good press on the stochastic, the multiple time frame analysis, the 4-hourly was showing really great progress. The MFI was oversold, the stochastic was oversold, Bollinger Bands was pierced. It was an open and closed trade. We got in on the perfect pivot and we held it all the way to the upside. So I made good profits on this trade. However, I did manage to get out early. So I said exited Euro Pound way too early, but still made great profits. US 30 Dow Jones Industrial Average made a good 0.20% profit in under 15 minutes, which is really a great trade. You know, I was trading on the 30-minute time frame. So I'll quickly try and find where I was trading it. So just pulling back into this 30-minute time frame, although these trades are slightly more difficult to take, you can definitely take the positions if you feel you have enough experience in trading it. So basically what happened is we had this push to the downside. I saw the market pulling all the way back to this level. I got in on this down spike. I got in like almost right at the bottom here. So I'll quickly pull up my results. I'm quickly just trying to pull up my history now. So as you can see, you know, the results in our track record that I just showed you are going to show the exact results of where we got in and where we got out. So you can go and have a look at those. I'm quickly trying to find where the US 30 trades are. Okay, so here we had 4 trades open on the US 30. We had at an open price of 25,857 roughly. So 25,857 is roughly the price. So we were 25,818, 25,857. There we go. So we had a push all the way to the downside right over here. We got in on these aspects of the position. We got in slightly lower on one of the bigger positions. So the smaller of the bigger position was slightly lower. And then we got out just 15 minutes later on the push all the way to this candle. So it was a great trade. I made good profits, got out of the position, and then the market basically stalled. Didn't really push much higher beyond this point. So you can see we had a spike to the upside here. However, the market just completely broke down and just carried on moving bearish. Now, I would have been able to trade some of these other pivots, but I wasn't really too interested in it. You know, I made the profit I wanted off the Dow Jones on that trade. And sometimes, you know, I'll trade in and out of these positions. But, you know, I was quite busy during the week, so I didn't really have the time to trade them. However, you know, there was some great setups. There was another push to the MFI level here. So, you know, going into the 30-minute time frame when trading the Dow Jones Industrial Average, when the market pulls back and then starts bouncing from time to time, you can find some great trade ideas on that. So going back into this, the Euro US dollar, that trade we closed out. You know that basically the market pivoted before, market pivoted back into the entry point, but has since moved back to the exit point. So the market on the Euro US dollar has been quite volatile. I'll quickly pull up a chart on that now as well. So I'm, you know, having a look at the time tick on now. We probably are going to go over an hour, but you know, I really enjoy doing these videos, so it doesn't really matter. It's really important that I can give you a clear and clinical breakdown of exactly what we're doing and why. So as you can see, we had the market push quite nicely. I'm quickly going to pull up the Euro US dollar positions to make sure I've got the exact dates of them. I have to go quite far back in my track record. Okay, so one of the positions we had here was on the 26th of the 4th. We opened out this position. So I'm quickly going to have a look at this here. So the 26th of the 4th is around about this area here. So as you can see, we had the market kind of pull back down. We were adding into our position in this area here. We had a nice push to the upside. We got out of the position a little bit early, but still made good profits. Would have made about an extra 1.5 times profit, but that's, you know, doesn't really matter. And then the entire market broke straight back down and then basically has begun to regather and try and push to the upside. Now, because of this article where they basically talked about the fact that they are having a look at further interest rate increases this year. Well, they said of no further interest rate increases, but the thing is that It's difficult to say. Some of the representatives of the Federal Reserve have been saying they actually do think we need interest rate increases, because if we do run into a recession and they try and drop interest rates to make it cheaper for people to pay off their debt, they default on, if the interest rate is not high enough, then they won't be able to do that, and then they'll run out of solutions. So it's difficult to say. However, we got out of that Euro US dollar position. Then sell orders US dollar CAD, we got out of a great trade before entry, market pivoted back to entry, heightened volatility seen. So I can pull up those as well. Just have to go back quite a bit. So we had on the 24th of the 4th, so I'll quickly have a look at where that is. So we had the 24th of the 4th was this major spike to the upside. We had the market pulling up to this level. As the market pulled back, we got out of the position. We got out of the position in quite a good amounts of profit. And then the position showed a lot of volatility, spiked to the upside, then back down, then up again. And all of these wicks you can see forming basically is what we saw as volatility. Now, though the market might over the long term pull to the downside, we're not really concerned about it. The market on the weekly is not really showing much of being overbought or oversold. And the market on the monthly is, although moving to the overbought area, you see over here, the market has moved into the overbought area before and literally just stayed in that for an extended period of time. So I'm not too worried. I'm not really too interested in getting myself into a long-term position on the US dollar CAD. We got in, we got out, and we made our profit. Now, open positions, buy order on CHF JPY, AUD JPY, and USD CHF. So USD CHF making great profits after stalling for most of May week 1 and 2. Market pivot seen on Thursday, 9th May. AUD JPY still bouncing around entry points, strong volatility seen, still holding position for now, added additional orders after sell-off. CHF JPY straight off entry point into good profit, good progress seen. We're going to have a look at these three trades, so I'm not going to show you on the chart now. Definitely have identified a possible batch trade on JPY trades and CHF pairs. So basically what that means is if we see a possible opportunity, you can see we've both got here a JPY currency, and then a CHF currency and a CHF currency. So our focal point is having a look at the CHF currencies and the JPY currencies this weekend to decide on if there's other opportunities in the market, because JPY currencies are showing that it's at extreme levels, and we think that they're going to pivot and make some good progress in the opposite direction. Same with the CHF pairs. However, this is a slightly more complex thing. Don't get worried about it. If you don't know what a batch trade opportunity is, further on in the program, you will learn about it. So let's quickly get onto this. Let's get through some of these trades. I'm going to show you some of these slides and graphs, and then I'm going to jump onto the charts and just give you a quick update of one or two of the things. So there's some really nice information here. All of these trades are playing out there, showing some incredible progress, and although we can't really predict future performance, we're at least happy that we're sitting on some really great profit for the week as well. We're only going into the second week of trading, and already all of our portfolios are green and showing some really good progress. So let me just show you some of the things that I've spoken about on this as a trade update. So price nearing historic high resistance levels, Bollinger Bands pierced, obviously. Weekly stochastic overbought, volatility funnel forming. So you can see there's a volatility funnel piercing up that level. Monthly stochastic overbought. So I'm said weekly stochastic overbought and monthly stochastic. So in terms of multiple time frame analysis, we can see that happening as well. And then strong candlestick pivot information. So I really want to try and press on that now as well for you. So let's just quickly go into that pair. So if you have a look here, you kind of zoom into the weekly chart. I'm going to quickly pull down one of these indicators, give us some space. So as you can see on this chart here, we have really the market showing quite a strong candle close. There was a really strong wick, and throughout the entire week, the market was literally spiking to this very high bullish level. You can see how throughout the week, the market was literally spiking up, pulling back, spiking up, pulling back, spiking up, pulling back. So we were literally going through a lost profit, and it was quite difficult to hold through that position. However, as I was speaking to my students, quite a few students I WhatsApp called last week and got on Discord with them to speak them through the volatility of this trade and told them to hold it. one or two of my students lost on that trade. One of my other students, I think he's up about 5 to 7% on the trade so far. So although he took considerably more risk, he's making good amounts of money on that. But the thing is that looking at the weekly chart, if you have a look at previously, I really want to zoom into these levels, the high spiking levels. So if you have a look previously, the market on this level showed a huge amount of spiking volatility on the candlestick. So going back to your candlestick analysis, you'll see what these candles really mean to you. And, we really knew that the market was spiking quite seriously when it was getting up into these higher levels. This is the market trying to push higher, trying to test a bigger level, break through that level. But if the market keeps failing to break out, it's because it's got a loss of momentum. And as you see here, we had a really, really strong pivot all the way to the upside here, and then a massive pull to the downside. Now, if you even took something as simple as a little box and you measured this distance in terms of shape analysis, I know this is so simple, and you just pulled that across and you had a look here, when you go into the closer time frames over here, you can see that the market is really, not in a very big level. We had way bigger spikes happen previously. So these spikes, I knew that if we had a push to the upside, I really wanted to add to the position. And that's really what you can see here in the smaller time frames is, I was adding quite a considerable amount of risk to the position, and I was leveraging the position. Now, this is something that you have to be very careful about doing. However, you can see right at the upside here, I added quite a big position here at about 7 lots on the trade. And that was really the last time that the market moved to that upside. I really just, took a big position there to cover my downside of my cost, because it has cost me quite a bit in swaps to hold this position. However, the market is making progress, moving lower. Even though this 4-hourly stochastic is oversold, I'm definitely having a look at the daily time frame. The daily time frame shows a good push to the downside. This volatility funnel is really what I'm having a look at. So you can see there's a volatility funnel forming. So I'm really hoping we can have price push all the way to this downside, possibly come to this level over here, or maybe even lower. However, when the market makes me enough money, then I'll get out of the trade. However, you can also see on the monthly time frame, we've got that market becoming very overbought. So on the monthly opportunities, there's definitely work to be done there. However, there is a lot of volatility in and out. So, I might just get out of this trade and take the money I have and, move on. So going back into the rest of it, that trade done. Also make sure if you have a look at the graphs and data, so I'll make sure the link to all of this is uploaded. You'll see all of them are updated really nicely over there. So you can see this is the chart that we had a look at, meaning you can just drag it over and zoom in to look at these very, very closely. So if you need to do that as well, you can do that. Going into the next one, I'm going to show you some stuff on the daily. So the daily stochastic is still overbought. The MFI is overbought. There's a bullish price channel as well. So if you have a look on the, even though there's a volatility funnel on the weekly, as you can see here on the daily, there's a bullish price channel. So this bullish price channel, that's the reason why I said, I might be looking at getting out of this position here, because on the daily chart, if this price moves down to test this channel, we could see quite a strong bounce as previously seen. And then the next one, Bollinger Bands pierced. So the Bollinger Bands were very strongly pierced. Market moved higher quite consistently there and then completely broke down. So we're quite happy at the progress this trade has made. And then in terms of the CHF, I said here, sell orders added as market began to weaken. So as we could predict the market weakening, we could see this bearish price channel. We could see every single time market spiked to this higher level, we basically were adding to the position. So you can see here, I've shown a snapshot of all of my lots, as you can see over here, and then shown you the actual trade entries, the dates, everything. So I'm really being, extremely transparent on all of my trades, on everything that we're doing. And once again, like I said to you, all of this is really verified, and this is not just executing on this portfolio. However, this is executing out on our Variance portfolio. So this is a micro fund of our Variance portfolio as well. You can see everything up over here, all of the trades we've taken. We're making great progress here. Our fair markets portfolio is doing awesome. We've already up over 3%. We take quite a considerable amount of risk on this portfolio because we have only one other client copying onto this portfolio, and they allow us to take quite a good amount of risk. So we're making some great progress for the year on this portfolio on MSC Prime. Variance portfolio, our pound portfolio is doing really well. You can see our standard deviation is really doing great. We haven't had much losses at all. And then in terms of our transaction cost, that is also consistently rising due to the USD CHF trade. However, in terms of this, we're also up on this portfolio around about just north of 1.2%. So we're quite happy with that as well. And then in terms of our FINSA portfolio, we're also up as well on the month. So we're quite happy with the progress right now. And in terms of these returns being time weighted, what that basically means is that's not just accounting for the positions we have closed, but also the P&L and the positions we have open. So the reason why I'm saying to you is making sure we're very carefully managing all of these trades, because we want to make sure we end on the month on a green note, or else then we basically have a bearish month, even if we've made money that month, but our open exposure is in a loss. So I just said here, leverage increase based on perceived weakness of trade. So, if you don't understand this perceived weakness of trade throughout the program, you will learn about how to predict those things happening, so don't worry too much about it right now. Getting on to the next trade. So trade update, AUD JPY daily buy. I did a video on this that we'll discuss slightly later on. So there's going to be 3 slides over here. So we will jump through all of this as well. Okay, I just had to make a quick fix to that. For some apparent reason, I had a duplicate slide here. So we got that fixed up. Okay, so let's just quickly zoom this in. Okay, so talking about the AUD JPY, this is a trade that we took. This was a trade that I actually got alerted on from one of my students. So shout out to them. Great work on this trade. However, what we basically identified in this trade, now this is going to be not only a trade update, but a bit of a new trade idea, because we haven't spoken about this trade idea in any of the Sunday Traders Talks. But if you follow along with our Twitter page, we update I update every single trade I take live. When I take the trade, when I exit the trade, everything. So make sure that you're following along with the Twitter page. You'll see here it's Morgan B. Sampson, so it's my own Twitter page. And you'll see that basically I'm updating on all of this. So you can see here, this is basically what it looks like. Buy orders in CHF JPY open at 107.710 with targets at 110. I basically will update all of this every single time. You can see here, have exited my buy orders. This literally happens exactly when I'm opening and closing these trades. And you can see just about all of these trades here. So you can see when I actually opened up this trade, and then you can see lower down here, stuff on Euro US dollar. Every single trade I take, I'm alerting on, except for trades where I know alerting on the trade like the US 30, the Dow Jones Industrial Average, it took me less than 30 minutes to get in and out of that trade. There's no reason for me to alert you out on that, because most people who see the trade will actually then take it after the fact. So having a look at this, what did we find? So firstly, we had a bearish price channel. So bearish price channel, just like what we found on the Euro US dollar, which worked out so well for us. Stochastic is strongly oversold. So strongly oversold meaning we had a very extended period of time here where the stochastic was oversold, which we'll discuss later on as well. The MFI close to oversold as well. So the MFI is moving to that level as well, which you can see previously has only moved into the very oversold level once, and then slightly close to that level again on the second time. So it doesn't really move close to that level. TSI, Trend Strength Index, extremely oversold. Now, you've probably never heard of the TSI. It's a custom indicator you add onto the charts. I'm not going to talk to you about it right now, but I am going to be uploading a video on it, talking about it. This is a very interesting indicator to make use of, and I thought I'd start introducing it to the Academy now. It's definitely an indicator I use a huge amount. And then I just showed you some of my orders here. You can see there's quite a lot of bunching up of orders at the support line. So this is the blue support line you can see there. And I've got quite a few orders below the line and mostly above the line as well. So I quickly wanted to show you the update on that on the charts. I'm quickly going to, that is the other trade we're going to look at. So this was the Aussie dollar Japanese yen. However, this was the other chart that I wanted to show you. So I'm quickly going to show you this update. You can basically see here we've got that bearish price channel. You know, we've got, I'm not going to talk through it too much because in this video, the channel trading video, I basically spent like a good amount of time fully explaining this, this trade. So I'm not going to walk through it too much. I'm not going to tell you what was in the video. Please go watch the video. Very important. Just click on that area right there. Oh, goodness. It just took us away from the PDF. That was not good. Okay, so let's right-click on it and say, oh my goodness. See, this is why I don't understand why people still use Internet Explorer. It's so confusing to make use of. Let me just quickly pop it up over here. Let's use Google Chrome, the reliable source. Okay, so you can see over here, this is going to be the trade idea. Make sure to go and have a look through this. It's 18 minutes worth of discussion. I'm not going to go through it with you right now, but make sure to go and have a look at it. Okay, so going back onto this, let's have a look at the chart quickly. So as you can see, we've had a push to the downside. I was trying to trigger on orders over here. I saw there was some really nice candlesticks showing, and then the market just continued to fall. But as you can see here, the stochastic has been sitting in the very oversold level. The TSI as well. I know, although you might not understand the TSI fully, you can go and have a look at some literature on Investopedia about it. Great indicator to make use of, but soon I'll be uploading a video on that. So basically we had a really strong push to the downside. We had this really nice bearish trend forming, and I decided to gather up my orders. Now, as the market has spiked lower, I've been adding to the position. However, in the video, I explain how there's multiple different channels to look at. Now, going back into the second slide of it, this is really the interesting aspect. So this was a different view of the chart because, as you can see, we had this view of it, and then we had a completely different view of multiple different price channels. So as you can see, if you take away all of your indicators, so I took away these 3 indicators, it completely changes the view of the chart because, like I said in the, I think it was the Traders Talk 2 weeks ago, where we were talking about Woolworths and how using certain indicators can manipulate the view of the chart. So that was probably April, the last week of April, now that I think of it. April week 4, Traders Talk. That was basically where I was talking about this. So I took away all the indicators and noticed that it expanded the volume of price movements and allowed me to look at multiple different channels. So price channels shown on multiple different levels. Important to see that. Bearish price channel intersecting with historic horizontal line price channel. Seen far left to far right. So you can see far left here, we have the market showing a very strong horizontal test and resistance. And then you can see on the far right-hand side, the market has moved to those historic levels now as well. Multiple channel support levels converging near or at current price point. So all of these price channels, these support levels, so these 3 levels here, I'm basically showing as the supports. And then you can see this 4th level support there are almost all converging on that point. So if we jump into the charts, you know, just zooming out, you can see the difference between the 2, Aussie dollar, Japanese yen. You can see that's the one view with the indicators, and that is the one view without the indicators. So you can see there's a massive difference. But zooming in here, as you can see, we're going to see these 3. So just to mark them, this one as a support level, that as a support, and that as a support, this trend line. And then the very low one, I'm also going to call a support level as well. So let me just quickly take this. So we've got 3 support levels, 1, 2, 3, 4. So there's 3 trend supports and 1 horizontal support. As you can see, all of those are really converging really close to where price currently is. So it's really good for us to see this and understand that, the market is moving into these levels. The only one that really isn't converging is this price point over here. So this price point is really just moving way above where price is, which is why I said there's only 3 convergence points right now. So, in terms of our move, we try to get into this position and we just, failed on the level. We didn't really expect to fail in that level so easily. However, because we are in such low risk, we're in, less than 0.5% loss on this entire trade. So we can really hold this trade for, quite a long time until such time as, we're worried about, the trade losing us money. So we're quite happy with that, but I'm focusing closely on these multiple price channels, knowing that if I have a really good bullish movement on this trade, there is going to be multiple projections of price movement. So we can move to multiple different resistance levels. As you can see here, I'm basically building a cone of expectation. And what I mean by cone of expectation is where I'm expecting price to move to. So although this is a prediction, this is based on my own discretion, I can still make use of this and more or less be not correct, but be somewhat within the ballpark of what I'm doing. So as you can see over there, we have got the market moving in definitely multiple different levels, but if we have price move to this level here and begin to push down, I might get out of the position completely. So this is not going to be a huge trade to take. It's going to be only, a bit of distance, but, being on a daily chart, that's fine. We'll leverage the position on the downside and then cover it once we move to this upside over here, just like we did on the euro pound. Even though we got out of the euro pound early, we made good profits. We got out of the position, as you can see here. We got in at the bottom, got out halfway towards the top. Even though we could have doubled our profits, it was still good money made, and that's really our job. So moving on to, just once again, don't forget to watch that video. Moving on to the last trade idea. So we've got 3 slides left and then we'll be done with the talk. So we actually probably will end on a 1-hour talk. So congratulations on that. I'm getting a bit better with my time management. But going on to this is also going to be a new trade we're talking about. However, this trade is already executed and moved past its entry point, which I'll explain as well. So a few points: stochastic level strongly oversold, MFI oversold as well, TSI strongly oversold to historic lows, historic support level test as well. So you can see historically it's tested this level multiple times, and then multiple oversold indicators provides conviction. Conviction meaning not proof, not a justified fact, but a conviction meaning you understand based on your belief. So we really can't predict what's happening in the market. However, we provide a conviction that the market is strongly oversold. So just jumping onto the charts here, I'm enjoying using the charts today. As you can see, try and ignore all of this because this is going to be the interesting, actually, you know what, I'll make you ignore it. Oh, I actually need to use this chart anyway because I've got the TSI up. So just, don't look at all of this stuff. This is going to be in the next slide. However, we have the market moving down. We had a perfect execution on this point. I didn't really even get the opportunity to add as much risk as I wanted. So although, the market has moved into a profit, I'm just going to have a look here. Yeah, CHF JPY, I only got an order in for 4.61 lots and 4.51 lots on my MSC Alpha account, which is my South African Rand account. My other portfolios have got a bit more risk added to it. Let me quickly have a look here. So on my pound portfolio, yes, I've got a considerable amount more leverage added. So I've got 2 orders that are a lot higher, that are in a really good amount of profit, close to about 1/3% profit, which is really great, including all of the other trades I've got, puts it just over 1/3% on a single trade. So if I have all of these trades play out over the long term, you'll see over here, this is my pound portfolio. You can see I added to the position over here. So if I have a look at that, my projected profit on this is around about £195 if we move to the upside. So that's really, a good amount of profit for me. Although the account right now has just added another £100,000 to the account. So now I'm going to have to leverage my positions again and focus on actually making, a much higher level of profit. So, that's a big one for me. I'm going to have to focus on re-leveraging all of these positions, which, as a fund manager is a fun thing to do, but although difficult when it manipulates the profit of your current positions. So really on this position, we're past the entry point. So, don't try and jump on this trade unless you want to be very brave, because, if we've got a profit margin all the way to this upside, I'll explain where my targets are going to be set as well. But the stochastic strongly oversold. The MFI went to those oversold levels as well. The TSI sitting at historically oversold levels as never seen before. So it's lower than ever seen before. So I'm very optimistic about the progress of this trade. I really think that we're going to push into a higher level here. So let's quickly go on to the grand finale of this. What I wanted to talk about is this. So you'll be able to have a look at this and say, but one of these shows a failed breakout. I'm quickly going to show it on the graph here. This is the trade we've just had a look at. What you can basically see here is we've got the market moving oversold and then the market pivoting all the way back up really nicely. So, it's a, trade that we've constantly looked at. The reason why I keep using repetition on this is because slowly but surely I'm building you by indicator by indicator. Now you can see we've just introduced the the TSI, and slowly but surely I'll build in with each trader talk we do new fundamental strategies, new technical indicators. So these videos are not only updating you on the week, but are terribly educational, which I love doing. I love being able to use these days to educate all of you. So please focus very carefully on these. However, as you can see, so stochastic oversold for an extended period. So you can see it's been gapped for an extended period, and then the market pivots and moves higher. And now again, we have the exact same thing happening, and the TSI being nicely oversold as well. However, you can see this red zone, which I wanted to focus on, is the market did not pivot, even though we had confirmation. And I said here, only failed price pivot found. Now you can see the market pivoted, moved nicely oversold. The MFI did its job. The TSI did its job, but nothing really happened. Now this does happen. It's not the end of the world. Sometimes it does happen. And I'm sure the question you're asking yourself is, how do I manage my risk when I get into the position, everything's lining up, however, I lose the money? This is basically what I wanted to show you. And I spent, a bit of time working on this, but I quickly want to walk you through this. So the one failed oversold level can be considered. No matter how perfect this strategy may seem, there will always be moments when oversold market will continue to fall, and vice versa, overbought market will continue to rise. Like I showed you with USD CAD on the monthly chart, you just had months and months and months of the market staying fully overbought, and it can really break you and damage your trading account. This is why we always focus on taking low risk positions that do not overexpose our accounts to losing more money than we would like. How would we assess how far the market could possibly fall? To the next slide. So this is going to be a slightly more complex one, but I'm going to walk you through it piece by piece. So to start out with, let's quickly have a look at the CHF JPY chart. Okay, so over here, what you can see is we have got basically a price prediction example. So the market has fallen here by 574 pips. So we took the previous trend, we took what happened previously. So the market fell by 574 pips, which we can measure, and then basically pushed all the way to the upside. So you can see the market pushed up here and then broke back down slightly, formed a bit of a teacup curve. And then basically it almost looks quite similar to Bitcoin right now, that price rise back to $7,000 and then move back to that upper level. Now again, what we're basically seeing is the market has fallen by 434 pips, and now we're trying to predict the future market performance. However, look back here, what do we see here? We see The market has fallen to this level. If we take this point, so where the market has now pushed to this level, so I took basically the exact center point of the stochastic. So if we got in on this point right here, you can see that the market has fallen by X amount of pips. So it's fallen by roughly 585 pips. However, never fell, never moved back to that level, literally never tested it and just continued to fall. Now, when I take this orange square, what am I doing? I'm basically measuring the exact half distance of this. So what's the exact half distance of this shape? I'm basically using it as an orange shape. So what does this mean? So I now know if I take this shape and just control copy, I can copy it all the way down here. So I'm just quickly going to remove that. So what have I done? I've copied the half distance. I've put a horizontal line there, and I've copied the full distance, and I've put a horizontal line lower down. So what do we know? The market fell by more than over half its price value before returning back to that level over here, never moving back below this level. Okay, so never moving back below the level and then spiking back up to test almost all the way fully to the upside of this resistance level. So what does this mean? The market broke this level, never returned back, however, never fell more than the full distance from the previous high to where the stochastic showed the market was oversold. So this distance, so from previous high down to stochastic level, continuing to fall, but never fell more than the full price distance, because you can see over here, full price distance is way, way low down. So never fell to that level, fell just beyond halfway. So it fell close to 3/4 the price distance, then returned back to close to the entry point, which would have allowed you to add to the position lower down and then cover slightly higher up. However, never moved lower than that because you can see price was regathering, making higher lows and slightly higher highs, and then moving all the way back to that level. So if you took the position, was able to manage your risk very carefully and hold the position, you could actually have made it all the way back up to that previous high. But it doesn't always work that way. Sometimes the market moves slightly higher and then breaks down immediately, as we saw over here. If I didn't get out of this position, if I thought, oh, the market is going to return to this level, I would have been holding a massive loss because the market has continued to fall. So from time to time, it will happen. From time to time, it won't. But that is why we showed this. So based on your risk analysis, as you can see, I've used half target distance. So basically, I've taken what I did previously. So these green and red zones. So the green is showing the full distance from the high pivot to the low point. And then what I'm basically doing is control copying, pulling it down to the bottom, and then showing my exposure level. So let's say, for example, I know the market would move down to the half stop distance. That's half the distance of the trend moving lower. Then what I'd be able to do is say, okay, well, I want to measure my risk based on, I don't want to lose more than 1% if the market moves to the half stop distance. So what I'd basically do is say, okay, what's 1% of my account? And then divide that into the number of pips the price can travel. So if the price travels 500 pips and 1% loss in my account is $500, then that means I must be risking $1 per pip. Very simple, and you'll learn this in phase 3. So if it doesn't make sense now, it will make sense in phase 3. Then moving lower, what's the full stop distance? Well, it's double the price execution. So hopefully, as long as I didn't leverage my account too much, it would be double the loss. So meaning a 2% loss, which means a 2% loss is not the end of the world, but I would still be able to monitor my risk. So as you can see here, we had the price moving all the way down low, pierced this level, and then move straight back up. So we did have the price move slightly lower to the half stop distance. So if our stop loss level was set within that distance, there is a risk we could lose it. So the whole goal, firstly, calculate your risk based on a half stop and a full stop. So that makes sense, I'm sure. And then focus on making sure your stop loss level is not too close to that point. Or for example, with myself, I try not to trade with stop loss levels because I know the market will spike it from time to time, but that is only because I am always on the charts trading. If I was not on the charts trading all the time, I'd be very cautious about doing that. So please make sure trading without a stop loss is very, very dangerous if you're not a really good person when it comes to trading. If you're not a professional trader and have a good amount of experience in the market. I've executed thousands of trades. So, I'm able to have the license to do that, whereas for yourself, you need to be very, very careful. So that is basically the end of it. This is definitely what I'm looking at, in terms of my risk. I have a suspicion the market is going to move to the half target distance. If it moves there, I might get out. And this is really what the euro pound was. On the euro pound, just going back to that, you can see basically we had the market move higher. It moved to my half stop distance. So if I show you here, if I take this from the high to the low, I'm just going to do this very roughly. So I'll literally just take that. I'll select it so I know that this little dot here is the exact half point. And then what I'll do is I'll measure that up. I'll put it there. So there we go. That's my half stop point. And then what I'll do is I'll just take a trend line. I'll make it nice and horizontal. And then I'll draw it from this point up to this point, up to this point. So what does that show me? When the market pushed to this level, I got out of the position and then the market continued to move higher. So for myself, job done. I did my job, I did what I needed to, but at the end of the day, the market could have moved higher. Doesn't matter, that stuff does happen. So once again, everyone, this is the end of week 2, May Sunday Traders Talk. Hope you enjoyed the talk. We covered a really good amount of ideas. There's not going to be any assignments for this, but there will be an assignment coming out for the next talk. I hope you enjoyed it. Make sure to watch those trades closely. Any new trades you come up with, you can send them through to me. Let me know what you think. I'll give you my input. And then any new trades, make sure to follow the Twitter page. Keep updated with that. Make sure to read your news every single day. And once again, everyone, this will be posted out over an email. There will be a link plus a link to the Dropbox folder. You can download the PDF, the graphs, and then the video will have access. And then on top of that, everything will be uploaded to the Sunday Traders Talk archive for you to access for future reference. Once again, everyone, hope you have a great weekend going forward. Happy Mother's Day to everyone. Hope you have a great day as well. And I will see you in the next video. Cheers for now.